everyone, welcome back to Mindful Investing. The rare earth and lithium trade has been a roller coaster, soaring on geopolitical headlines and then seeing some pullback now from the last two trading days. We have seen names like Lithium Americas and MP Materials swing widely within weeks. So, what's behind this volatility? Is it fundamentals or just hype? Let's unpack what's really happening beneath the surface. Over the last few months, we saw a massive rally across rare earth and critical mineral names. Some of them were up 200%, 300%, and even 500% in a matter of weeks. And the trigger here is geopolitics. China threatened new export restrictions on rare earths and lithium ion batteries, which are essential for electric vehicles, wind turbines, and even fighter jets. That move instantly reignited investor excitement for US and North American producers, companies like Lithium Americas, MP Materials, and Ramaco Resources. Even the US government jumped in, taking small stakes in domestic miners to reduce reliance on China. And the result is rare earth stocks exploded higher, with traders trying to chase these stocks, expecting a wave of government contracts and subsidies. But what goes up that fast often comes down just as quickly. After a parabolic run fueled by hype and headlines, rare earth and lithium stocks are now giving back a big chunk of their gains, and many are down 20 to 30% from recent highs. So, what triggered that pullback? Let's break it down. Number one is profit taking after massive rallies. Some of these stocks, like Lithium Americas and Ramaco Resources, had surged 200 to 400% in just a few weeks. When you get that kind of move, traders naturally lock in profits. Number two is weak fundamentals beneath the excitement. A lot of these companies are still in early development phases. They don't yet have strong sales or cash flows. For example, Lithium Americas is still building out its Thacker Pass project in Nevada. That makes valuations extremely fragile once the hype fades. Number three is downgrades and valuation resets. After the rally, major firms turned cautious. Lithium Americas, for instance, got downgraded to sell, with targets nearly 50% below where the stock was trading. The message was clear: government investment or not, the fundamentals didn't justify the price. Number four is long and uncertain timelines. Projects like Thacker Pass or Ramaco's Brook Mine will take years before reaching full production. In the meantime, earnings visibility is limited and sentiment tends to swing hard with every piece of news. Number five is policy hype cooling off. The initial spike came when China threatened export restrictions on rare earth minerals and lithium ion materials. But once that story cooled, so did investor enthusiasm. Even with US government funding or equity stakes, it's not enough to keep valuation stretched this high. Investors are realizing this sector moves mostly on headlines, not hard numbers. When that happens, momentum fades fast, especially in a market already rotating toward more predictable, cash flow heavy names like AI and cloud. In short, the rare earth rally ran ahead of reality, and now we are seeing that excess get priced out. So, here's the bigger picture. This entire sector sits at the intersection of energy transition, defense security, and geopolitics. China currently processes nearly 85% of the world's rare earth materials, giving it huge leverage in global supply chains. That's why the US is aggressively trying to build domestic capacity, investing in projects, supporting miners, and pushing the resource independent narrative. So, yes, the story here is very strong, but the business behind that story is still volatile, speculative, and heavily dependent on policy moves. Now, here's my view, and I say this after running the numbers and reviewing multiple companies in this space. These stocks don't fit my investing style. They move too much on news flow and political momentum, not on actual cash flow or earnings power. Even as a swing trade, I wouldn't hold these in my public portfolio. The risk to reward just doesn't line up for me. However, for anyone who truly believes in the long term rare earth or critical mineral story, a smarter and safer way to gain exposure is through the Van Eck Rare Earth or Strategic Metals ETF, ticker symbol REMX. It gives you diversified exposure to key players across mining, refining, and recycling without betting on any single company. So, to sum it up, the recent drop in rare earth and lithium stocks isn't random. It's simply the market resetting after a wave of hype and speculative buying. There's definitely potential here, but timing, patience, and discipline are everything. Personally, this sector doesn't fit my long term investment framework, but through ETFs like REMX, you can still participate in the theme while keeping risk in check. If you found this breakdown useful, don't forget to like, subscribe, and share your thoughts in the comments below. Are you buying into the rare earth story or sitting this out? Thanks for watching, and as always, invest smart, stay patient, and I'll see you in the next one.